High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. Master the Markets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hello traders, and welcome to our live trading workshop webinar today on price and volume in live trading. So those of you joining in new for the first time on YouTube and on Zoom, what we'll be doing is, traders, firstly we will be taking a look at live trading positions first, okay, and then secondly we will be taking a look at topic. The topic for today is going to be based on Forex volatility. Okay, so that is what we are going to be taking a look at. Now, exactly what we're going to be looking at over here is that, let me just get the topic out for today. So it's on volatility and what volatility really means. Okay, so this is what we're going to be looking at over here. And let me see if I can get the topic. Let me see. I think I've not got that there. It's okay. I'll look into that later. So the main thing is that we'll be looking at how to profit from Forex volatility. I got that. And then also, you know, if you take a look at it, yen, I was just taking a look at the dollar yen, traders. It's a 2-month low and the dollar dominance is fading. But as you know, there was a big rebound. And why did that happen? We will take a look at all of that in our topic for today, right, on how to profit from Forex volatility. The other thing also is we'll be looking at upcoming events and also a Q&A as well, okay? So anybody got any questions, you can type it into the chat box, and then at the end, we will be answering all of them, okay? So this and more in this live trading session. Traders, those of you joining in new for the first time, Mr. Napan here, founder of Master the Markets Illustrators Conference and the Traders Open Day, okay? And today we will be looking at, I was just taking a look at dollar yen earlier, and we were looking at actually a short, long position actually over here, okay, on this high over there. But it looks like it's taken that out. Finally, it's given way, okay? So that is not a valid long position at the moment, as you can see. Now, what we will do is we will reanalyze this. I know this is not towards our bias, but let me go through this with you, okay? And why we can actually, we're considering this on a long position. The main point is that you can take away these principles and you can apply it onto your own strategy, okay? That's the whole idea of this. Right, so let's take a look at this and analyze this a bit more deeper. Now, you see on dollar yen, if I take a look on the different time frames over here, if you see, right, on the daily time frame, it's an uptrend phase 1. Okay, so that's what I've got written on the trend box, on the trend alignment table as well. Okay, now on the 4-hour as well, as you can see, that's an uptrend phase 1. The only thing we have to be wary of on the 4-hour, traders, if you take a look, right, there was a big gap over the Sunday as well. Those of you who've been following it would have seen it. But as you can see, our top and bottom quantification came around here, okay? And then you saw the big gap. It's quite extended from its bottom over there. This swing, it's losing its momentum and therefore a top is nearly due, okay? According to this framework is what we are talking about, all right, traders? This is what we are looking at. Now, in terms of the 1 hour time frame, let's take a look on the 1 hour time frame over here. On the 1 hour, if you see, what we are getting over here, traders, is that we are getting uptrend phase one. Let me just take a look at here what we do have. At the moment, it would have turned into the downtrend, is it not? Right? So phase one. So I will record here as well. And then on the 15-minute, clearly that would have also turned into a downtrend phase one, because the main reason being it taking out this level over here, okay, and it continuing on with its phase, right? So that's a downtrend phase one. It's extending further down there. Big volume spike, as I can see over here. We'll go through the VSA principles very shortly as well. I know Gavin was meant to join us, but he's taken a little bit of a break for now. So he might be coming later. So wait and see. So this one is on a downtrend phase one. And on the stretch basis over here, you can see that in terms of this trade, I'm just going to go through with you on what it all means. Now, in terms of the stretch principle, before it had taken out the upper stretch, now it's doing the opposite stretch, as you may call it. So I will just put here both, right? But latest is the downside. I'm just going to show you this table in a short while, and I'll show you the volatility table as well when we come to our topic for today. And in terms of the range lines, what I found is that the latest it had taken out was the upper range, but that's only at 8 a.m. But that was a false breakout, okay? As you saw over here, then it came dipping down, is what we can see over there, okay? Now, in terms of the Bro to ST, it was to the upside, and then the previous daily high had been taken out, and 50% OE is 180R. So if I were to put all this together over here for you guys, you can see that, let me show you all here. So you can see that over here, there's two time frames on the upside, okay? Two time frames on the downside, okay? And then now the stretch is also to the downside. The range lines, okay, latest is lower range as well. I'll just put that over here. So you see, once you put this in, then only you can get clear, okay, on where the trade is going or what direction buyers you're going to get. So I got two time frames on the upside, two time frames on the downside, but I can see that the bar mechanics on the stretch and the range lines is also to the downside. And then the Bro to ST and the previous daily high and low is to the upside. So quite a mixed signal, isn't it? So what we got is four parameters, 1, 2, 3, 4, signaling to the upside, but 4 here signaling to the downside. So it's 4 against 4, isn't it, traders, right? So it is at these times when we just take a step back and we don't trade this kind of instruments, okay? So that's what we do. So that's why I'll put an NA here. But before, it was like 6 or 7 out of 8 parameters that was showing to the upside. That's why we're looking at timing after that. But before this, we also had taken a DAX trade also, which did hit our target over here. I'll go through that in a minute too as well. But if you analyze dollar yen, what's going on is, according to this strategy, yes, we won't be taking it because in terms of our bias, it's not really aligning. But if you take a look for it from another perspective, I'll show it to you here. So you see, this one is about 88, isn't it? How much has it done at the moment? So let's take a look. It has done about 110 already, okay? So what has it done really? So let me show you what it's done. So if we put that side to side over here, right? So take a look at this, okay? So this is what I'll explain, and this is what we're going to be going in depth on the summit as well next week, okay? So if you take a look, the day started from this where I'm drawing here, okay? This one bar that you're seeing, right, is what is all these 12, 14 bars here that you can see on the 1 hour, on the 1 hour time frame, sorry, yeah, this one here, okay? Now, what it's telling you here is, if you take out the open here, okay, the open was basically on here, the blue line where the stretch indicator is. And then if I draw to the upside, all the way to the up, okay, to this point here, right? So from here to here, how much has it done from the open to the high, okay? So let's see over here. This is 57 points, 57 pips, okay? So 57 pips, it's done over here. Now to the downside, as you can see right now, okay, to the downside here, right? So how much has it done over here? So let's take a look. Now, before I even type that out, you can understand that when you take a look, this is the power of this, right? And this is all based on recurring principles, okay? So if you take a look at this, the average range it will do on the daily time frame, if I hover my mouse on yesterday's bar, that's about 135 traders, okay? 135, okay? Now, that means if I go for at least to smoothen it out, not to get to 180R, but 80% of that, right? So 80% of that would be about 96, okay? About 96. Let's see what it would be about. Let me see. Let me actually put it over here. Here 133, 133. 106, okay? 106 will be our 80% ATR number, okay? Now, to get to 106, as you can see, it's already done 57, right, to the upside from the open, yeah? Now, if it were to do 106, it's got to do 51 to the downside, 51 to the downside, okay? Right? So that's how it can make up our range, our 80% ATR range of 106, okay, pips. Okay, so far so good. So you can see today, right now, you can see, before I tell you that, before we calculate how much it has done so far before, this was the rationale for, basically for us looking for long bias before it did its big downside move, okay? Right, so the rationale was that, and you can apply this on anything at any point of time that you see. So if you look, it was 57 pips from the open to the high. And then if I were to say, if it were to do its range to the downside, then it's going to make 51, okay? But at the same time, when we were analyzing it, the open to the low was only about 30 points or so, okay? So you can see it from here. I can just calculate for you from the open before this bar was formed, okay? This 1 hour. So if we, let's say, erase that away, okay? Imagine you can't see that. So from the open, from here, and then let's put all the volume on top, okay? So the open to the low was only 23, right? So 23 only. So it was only doing 23. So therefore, if it were to continue to its upside, right, how much more it has got to do? So it has got to do another 80. This one is about 80, 26. So from here, it's got to do another 26, you see. And why it was coming out as a really good, strong signal for long buyers before this big red bar happened was that if you look at the volume as well, we had a big support of this bottom, okay, that you can see on the 15-minute time frame. So let me put the 15-minute on. You can see, okay. And if I were to expand that, should I expand it? Okay, never mind. Let's keep it like that. So you can see, right? So on the 15-minute, you see this big bar here, right? Big white spread bar, right? And look at the volume spike, large volume spike above the third relative moving average. And then after that, look at that, it came to test it. Perfect VSA setup, right? And then after that, then you can see, then it came back to here. But then the good thing is the SMI hasn't confirmed yet, right? So we were waiting for this, for the confirmation dot. And that's what a lot of VSA and SMI clients, they tell us, is that as you wait for the dot, oh wow, Tiru, you know, we preserve our profits. We don't take unnecessary losses, okay? So that's the whole premise of all of this, all right? So as in using in combination of the VSA principles plus the SMI together, all right? So as you can see, I can then calculate then to make this 106, how much it's got to do to the upside and then to the downside. And then if I were to take a bias to the downside, how much it's got to do. Usually, if it's done 57 and I've got to do 51 to make 106, it's about nearly 1-to-1 ratio. And those are the ones I do not really like. Because if you take a look, whenever there's a buyer bar, it's quite a strong to the upside, isn't it? It's not like almost in the middle that it closes, yeah? So that's how we use this, and we use the bias towards the long side. And on top of that, what we then do is, of course, put the VSA principles on top. Now, the main VSA principles, as you guys would be familiar with, right? If I were to take a look over here, the main principles, what you would know is that mainly is your high volume, right? And a small spread bar, effort versus result, as Gavin will always say, right? So you got a high volume, okay, but you got a very, very small spread bar. So then you know that something is fishy, isn't it, right? So you can see that, okay, the bar might have closed up, but it's very small, okay? So you can see that, okay, there's a high volume below that bar, but buyers are not that active to push the price more further up. So that's when you can start to see, do I really want to get participating in this kind of a move or not? The other thing is high volume on down bars, right? Supply and demand imbalance. So when you see, when you get a down bar like that, okay, a very big down bar, all right, but then one type of down bar is where it closes to the near um, to the bottom, and then you get a big volume spike, which is what is happening at the moment on here, okay? But then if you then take a look, right, on the other bar over here, something is not correlating. It's doing a big reversal, okay? It's fighting against that. So that's when you start to think, you know what, is this selling really true? Or is it a fake, or is it a shakeout? Well, and those are the best signals, especially when you don't use this as a standalone, but you combine this with all the trend alignments across different time frames. Okay, so that is what you are really looking at. Okay, right? So, and then you apply the stretch principle. So when you took a look at all of that, that's why we were taking a look at this long side earlier on, but only when there's a swing confirmation and a trend change occurring. But we didn't get that on dollar yen, and that's why we stayed back. But for now, in terms of this strategy objective, you can see that it has already done its range, okay? It's already done its range of 112, and as I said, 80% was the 106. Now, the important critical thing I would say before we move on is that you can't look at this and say, you know what, I missed that move. No, that was not according to your strategy objective and rules to take that trade, and therefore you step aside. Whereas earlier on in the day, some of you who have been looking at the DAX, and we ourselves were looking at the DAX as well, would have taken that trade because everything would have correlated. So if I show you on the other screen over here, if you took a look at DAX over here, when I aligned everything, everything was to the upside across all the different time frames. And then on 15-minute, we saw a nice confirmation bar come up, took it towards its relative target based on the OE based target, which we were explaining yesterday on Wednesday, and on our live channel over there where we were explaining using the OE tables, right? How far it will go. Okay, so that's how we got that target for the DAX. All right, so that's how we use all these principles. For now, dollar yen will take a step back because it's done its range and it's hovering around. Those of you who want to carry on and observe this to see maybe if it goes to its 1 ATR range, one thing I can say is based on the volume spikes over here, one of the critical levels you'll be taking a look at is this high for it to come back on again, 152.86. But my hunch is that it will start to consolidate now and probably it'll be good to revisit this probably tomorrow. Okay, that's what I would say. Okay, good. So that's that one there in terms of the live trading position. So we didn't get that on the dollar yen. It was good that we held back because we had a big downside bar on that. Okay. Right, that's how we have to stick with patience in terms of our rules. Okay, we can't just jump in out of impulse. So that's very, very critical. Also important, let's see how this bar closes as well in relation to this big volume spike bar. Great. I think with that said, a lot of you are asking me some links to look at. And very shortly, I'll just show you all the links. I'll also show you all the MAE factor that we have programmed into here. Okay. You can use this across any instrument. I will come to that in a minute. And you can apply this onto any instrument. So as this is populating that, we will come back to it. I'll bring this on the 1 hour time frame. And then as it's doing that, let me go through the reference links that you guys can take a look just to understand all of these principles a bit more stronger and understand these terminologies. Okay. The first thing I would say is take a look at 7 steps to CTP. Okay. Now, in 7 steps to CTP, what we have done is, traders, this is over 15 years of collated research, all right, with our 50 years of team cumulative experience. Okay, this is what we got. Now, once you have put your name, email, and your contact details, and you hit your green button with I'm not a robot, then after that, traders, what happens is that you get the 7 videos being sent to your inbox. Okay. Now, the 7 videos, what is it actually saying? I was talking to another client and they were saying, I know what, Tiru, I want to really understand this smart money framework that you guys have created. Okay. And I want to combine that with the VSA principles. Now, how you do that is first you need a market structure. So with the smart money indicator, what we've done, we've created a market structure, okay, which you can also call as a framework, the smart money framework. Now, the smart money framework, we will take it step by step through these videos. That's why it's very invaluable you watch this or revisit this if you have watched it before. So the first thing is that we explain what is the main challenge that traders usually have, and the premise and the first starting point on why even the quant traders back in the 1970s started about thinking about creating this framework. Okay, so that's what we will talk about. And then after that, and do remember that, when the quant traders were talking about this, thinking about this and everything, and my mentor's mentor used to also reference Richard D. Wyckoff quite a lot on this, and in terms of the VSA principles, especially on the 4 market phases of accumulation, up move, distribution, and then finally correction. Okay, so based on that, they wanted to create a framework, and that's why the first step they had to do was quantify the tops and bottoms, which is what you can see over here, traders, right? So let me put that on over here again, and let me load that up. Okay, so that's what you can see over here also on in terms of all the different instruments. You see the tops and bottoms that has been quantified, right? So that's what we are taking a look over here. Right. So that's the first thing that they wanted to do, because once you quantify the tops and bottoms over here, what happens is that you create a structure, right? Like this. Okay. Right. I can create this into a line diagram. And from there, you can get your 4 data points. The first one is your trend in your face, which is so important for us to formulate and fill up through this table to see where my direction bias is, which is what I just did, didn't I, right? So to see where my direction bias is. When it's not very clear, we take a step back, we sit on our hands, right? On some other instruments, it'll be much more clearer and there's much more easier money to be made over there, okay? So that's step one there. And then after they've thought about all of that, that's the first step that they did, so you can watch it through all those videos, then they derive the three stats. These are so powerful, right? One is the open equity, how much move is left. In fact, a lot of clients have told us that we're the only company which gives probability stats on how much move is left, on the tables. And yesterday we went through that as well, much more in detail. You can look through that. You can see over here as well, it's telling you all the market structure. I'll show you in a minute as well. When I show you this, in terms of that, this will start to populate that. And then you can see the tables, okay? So we'll go through the tables a bit more later. So that's that one there. And then we'll go through the MAE. This is another stats. This will help you to watch by placing your stop loss so that you trade with conviction. A lot of traders come to us and say, you know what, Tiru, it's good. I got all my targets set in and everything, but sometimes it stops me out. And then I only see it then go up furthermore later on, right? And then the other stance you can take a look is how long does it take to get to your target? This is, imagine like in a race, isn't it, right? You're measuring the stats of the runner. How long does he run? How far does he run, which is OE, right? How far does the trade run? And then how much does he rest? How much does he go back, right? Before going to his target, and then how long does it take to get to the target, okay? So all these three things we talk about there. And then finally also, then how do you use all these parameters to construct your strategy? And then how do you put that strategy into your whole trading system? Because a strategy is only 1/3 of the entire trading system, okay? So highly invaluable videos, so definitely go and watch them, and you can register for them over here, okay? So that's another thing. I mean, a lot of people who watch this, I know it's free and everything. They come and tell us, you know what, I'm so surprised you guys give this for free, because your free material, outbeats so much other paid products out there in the market. But that's what we pride ourselves in, giving really quality content that will help you refine your thinking to how you look at the markets. So that's that one there. Those of you who already seen it, but you know what, thinking about it or forgotten about it because life came in the way, you can always go on to the SMI and VSA page and then get both the indicators sitting onto your screen over here and have the tables all in front of you, okay? So you can go ahead and look at that. Those of you who got VSA then already, you can always email us and you can get a small discount on that to get both the indicators onto your screen. The other thing is the YouTube channel, youtube.com/master the markets, right? That you can go to over here, traders. One of the ones that you guys were asking were the stretch principle videos. Over here, you can go over here under the must watch section and then go under here, stretch principle videos. You can take a look over there, and this will give you a very good understanding of what we mean by the stretch. And then I go through much more in detail what we're doing right now, the bar and how it forms. And on the summit, we'll be going through much more in detail on all of that. The other thing that you guys can also do, I just remembered, some of you say that, you know what, Tiru and Gavin, whenever you guys go live, I just want to get notification on my phone, but I just don't get it. The reason is you got to do two things, right? One is you subscribe to the channel. Then the other thing is, this drop down arrow that you see over here? When you click on that drop down arrow, what you got to do is you got to click on the all bell icon over here. Once you've done that, every time we go live, you will get a notification. Okay, so that's how you do it over there. And then if you don't have the time to watch it when we go live, what you can also do is you click on the live section over there, and then you can revisit that material at any time that you want. Also, yesterday we went through how to use pivot points. We also took a GBP/USD trade, but then that didn't trigger, so we had to cancel it just like today. Okay. Right, so all that, and you can see all the previous videos, really great content over here. Once you got the knowledge and the framework, then you can see how it's applied in real time. That's why me and Gavin, we always like to trade in real time at the right side of the chart. Over here, you can see all kinds of trades where we traded in real time, where, you know, the Brent oil will go and hit all three targets. Another one where it comes near to the stop and races towards the target on gold. Another one's where it goes straight to the stop loss. We never shy away from the losses or the wins. Some of them, you know, hits the trailing stop loss, but for a small profit. Everything, you can watch it over here. Okay, this was a really good one where we did on gold as well, the good analysis. You can also take a look at this one as well, traders. Okay, right. And then on Trade Guider channel, do the same thing, youtube.com/Trade Guider. And then after you subscribe, hit the all bell icon here as well. So right now you can see that we are live on that. You can watch all the videos from previously as well. And then the summit. I know some of you have been asking about the summit over here. This is happening next week, traders. So I know a couple of you have been asking about the online tickets because it's quite last minute for you all to travel. You can definitely get it on this page. So read through that. What we're going to be doing over here is we're going to be doing live trading, right? As well as we're also going to be taking a look at basically research updates, how we can apply that into your strategy. And then we're also going to be taking a look at basically on how you can then construct your own strategies, okay, and boost their performance, even if you got an existing one as well, how to integrate all of this. Okay, these are the things that we're going to be taking a look at. Our clients, some of our clients are going to be coming there. They're also going to be presenting some of the material that they have actually researched and coded as well. So that's quite inspiring to see. In fact, most of the things that you see is actually done by our community. In fact, most of the everything that you see over here on dollar yen and everything over here on with all the indicators over here and the tops and bottoms quantified was actually coded by one of our traders, right? So that's what we got here. The community itself uplifts its community, okay? That's the things that we got. Here, let me just reload this back once more and then let it do that. So that's on the annual summit. And then over the 2 days, we will give lunch as well. And then on the first day, we'll be doing dinner as well. And we are planning to do it in Heron Tower. Okay, so beautiful, very big, large building, tall tower that you can get iconic views of London. And then also we'll be having our dinner over there. So if you want to read through that, go for it. And then if you want to get your tickets, you can get in touch with us if you're unsure about anything at clientservice@masterthemarkets.net. Okay. Quick shout out to Trade Nation is also sponsoring this event. We'll be doing it at their offices, and also they are the ones who are also sponsoring our Telegram channel, where you are getting the signals being sent to you. Okay, so that's good. I've talked all about that. Now let's go on to the topic for today, traders. Right. So the topic for today is on volatility. So you can see that after stopping everyone out, this thing is a big aggressive move to the upside at the moment, is it not, traders? We won't participate in this because of it doing its range, but we will see if it does confirm. I'll take a look on the other screen later on. Now over here, what I'll do is I'll put the MAE, right? So how to profit from Forex volatility is what the question is. I'll put less than or equal to here, and it will start to churn. Okay, as it's getting the data, I'll tell you first, we will start off with what is volatility, okay? The first thing about volatility is that volatility usually has got a negative connotation, okay? Whenever you talk about volatile or the markets are volatile, people are saying, oh, you know what, it's going to stop me out and go to the target, or it's going to just chop you around and I cannot get to the upside what I want to get to. So, but volatility can be to your favor as well, traders, okay? And why do I say that? You see, first of all, there's volatility to your maximum favorable excursion, they call it, right? Or it can be adverse to you as well. So let me explain. So for example, if I got something like this, I can either, right, once from my point of entry that I've got here, let's say I've entered around here. From here, if the volatility is to my favor, I can get big bars going in my favor, right? This is what we call the maximum favorable excursion. And sometimes, even if it does do an outsider bar, but then it's still moving in your direction towards the upside. Very similar to what's happening towards here. Okay, yes, the volatility is quite a widespread bar. You might have taken out stops, but it's still going towards your direction. Sometimes it's more clean. There are more distribution bars, but the volatility is locked in over there. So that's the volatility part to the upside as a positive factor to increasing your profits, okay, your unrealized profits. Now, the ones that people do not like, okay, is the volatility where it chops you out and then still goes in your favor, or it goes to the downside. So let me explain. So let me draw a few more examples here. So one volatility is like this, where it would then come back all the way down, and then after that, then you got another big green bar coming up, and then after that, then it starts to do this. So it's all over the place, right? So a bit of consolidation, but very highly volatile, where whatever target that you put, you can probably get stopped out, okay? The other thing is, in terms of its volatility, sometimes it can do this as well, which is the most frustrating thing, really, which is just like what's happening over here. You got all these red bars coming up. You think then you're positioning yourself for a long. You got in around here. Then it does this. Okay, so it does that, comes all the way down, shakes everyone out, and then after that moves all the way up, just like what is done now, and then goes to the upside. Okay, now that's frustrating because not only has stopped you out, but it's still going in your direction, which is what you are having over here. Now, how do you get rid of all of that? Yesterday we went through volatility to the positive side, okay, which is part of the open equity tables. Today we will go through the volatility to your downside, which is here, right, where it stops you out and then still goes back up. So understanding the MAE now, how does it help you? Why is it important? Okay, why is understanding the volatility to the downside, to the negative side, important? Because if you really understand it and go deep into it, you can really protect yourself from volatile moves and not getting stopped out unnecessarily before it moves to your target. Okay, that's the whole premise of understanding and studying this thing in much more detail on the MAE. Okay, so that you don't get stopped out on an ISL and still moves towards your target. Now, how do we do all of this? As I said, in the 7 steps of CTP, we go through that in more in detail. The first step is always quantifying your bottoms and tops. Now, after you quantify your bottoms and tops, then you can get this MAE number in a statistical manner. So let me explain over here, okay? So let me probably do it on here maybe. Maybe I can do it on here, right? So if I were to do this, and let me actually remove that. So let's go and study this volatility a bit more closely, but with all the numbers of it, okay? And I'll show you how really powerful this is, okay? And those of you, I mean, over here, because of time constraint, I'll just go through it a little bit as an overview, but you can always go through it much more in detail here on this video number 4, okay? On MAE, after you've gone through, after your Insight 7 steps to CTP. Let me put this on a 15-minute now. In fact, yeah, let me do that. Okay, now you can see, let's see when this closes, if it's going to confirm. There's going to be a high chance that this will go to his 1 ATR target. I will just also monitor it here, and I'll show you guys as well, right? Those of you who believe that because of the strong reversal on VSA principles, this is going to go further up, you can take a look at that as well. But remember that you can formulate a strategy based on that as well, okay? So this one here, 1 ATR is 24 pips. I will just do that in terms of that. Okay, just nice, just around here. There you go. We had a confirmation of that bottom there. and that's 24. Okay, and I will do that. Okay, and then we can track it as we are talking about this. Okay, in real time. So we got our entry there. If you do want to take that as a strategy objective, as your other strategy. So this one here, 15316, isn't it? Roughly, right? So wait and see if it does get to there. Now, but the critical thing here is, where do I put my stop, right? So if I were to now go on to here, select the MAE, hopefully it does load it up this time round. Sometimes with the server, it just takes time. So this will now tell me where specifically I can put my stop so that I don't get stopped out this percentage of the time. Okay, so it will tell you all of that. Now you can see over here, it's telling you that if I put my stop 25 pips away from the close, okay, I won't get stopped out 97% of the time, traders. Almost 98% of the time, 97.86. And that's quite a powerful stats to have, is it not, traders, right? So here you can see that. So I'm using all the VSA principles here. That's what I was talking to you all about just now. Remember that, there's a big volume, widespread bar, but there is a big volume spike. So volume on a big volume strength on a weakness, okay, strength on weakness. So what we are seeing, but then what was the alarming thing on this is that even though this was a big widespread bar that was on the downside, but then the next bar springs up and then we get an SMI confirmation of that bottom. Okay, that's what's telling you. And before that, we also had another volume spike over here. So this tells you that professional buying is occurring around here. Okay, that's the whole premise, traders. Then it's all conforming with also our higher time frame trends as well. Then when you combine all of that, if you did want to take a trade, but put your stop in the right place, okay, because if you did put it all the way to the low, that's quite a bit far away. So how do you do it, but still with some logic behind it, okay? This is how this framework helps us. So it tells you that if you place your stop 25 pips from the close of the bar is where we are entering here. So the close of the bar is 152.92. So from here, if I place it 25 pips away, is what it's telling me, 152.67, okay? And 152.67 over here. Let's do that. Let me just... There we go. So that's 152.67 over here, what I'm placing it at. If I place my stop loss at 152.67, it's telling me, according to the stats table, you see, from here, what it's telling me is that, according to here, I won't get stopped out 97% of the time. Now, that's quite a strong stats to have if you're trading on this time frame after you've got your direction bias from the different time frames. It's quite a strong stats to have to trade with conviction, is it not, traders, right? Before it gets to its maximum point reached, okay? That's the whole premise of this, and we have shown this all in real time that you guys have seen, and that's how most of our traders are doing it. And especially after they come and say that, you know what, they've had many years they've been trading, but they're not getting consistent performance. And once they see this, they get the clarity, and you can apply this on any kind of strategy or any kind of instrument as well. You can apply this on futures, on options, commodities, indexes, Saudi stocks, India stocks, US stocks, UK stocks, doesn't matter. Okay, you can, on a click of a button, because of the thanks of our clients who have coded all of this, you can get it all on Trading View. Okay, we got it on other platforms as well. We got it on NinjaTrader, we got it on MT4 as well, that you can use this. Now, the other thing that you can also do, you can use the ATR function over here as well, right? So when I take a look at ATR, if I do this, we can find that too. So then I can use a combination of those parameters, okay? And I can use the smaller of them, okay? As this churning out, you can see that very soon this will turn into an ATR table. Now from the ATR table, I can see this is 27 pips at the moment. And you can see, right? So if I put my ATR 2 ATR away, okay, 2 ATR away, I won't get stopped out almost 98% of the time. So what I then do over here is that on this, 27 is 54, 54 is here, okay? So I can have my second stop loss mechanism. But what I will always suggest to do is use the smaller of the two, okay? That works out better when we've seen in our testing in terms of the strategy construction and how the numbers will work out. All right, traders, okay? So that's what I would say. Those of you who want to look into this, you can, and you can put all these numbers and you can see. But remember, this is over a period of time. That's how probabilities are worked out. You never look at just one trade. But in terms of also your strategy construction, every strategy will have its different objectives. The one that we looked at before was based on range capture. The strategy number two, if you want to base it just purely on VSA principles over here, right, then you can do that as well. Based on VSA principles, you then take the entry with the SMI confirmation and the entry, initial stop loss and target all based on the SMI, right? If you want a guideline and use the stats. And if you don't want to use the stats, that's fine also, because you can just use a trading stop and just get out when the trading stop gets hit. That's what Gavin usually likes to do as well, okay? And on top of all of this, you can then also apply the VSA light function also. As you can see over here, this is a gray dot. That's a good sign whenever you're taking on a buy. Or if it's a green one, it's even better. As you can see, right? The green dots over here aligning over here. So that's the whole premise. But you must understand these are all just guidelines and framework which you can then incorporate that into any kind of strategy. Okay, that's the whole premise of all of this, traders. Okay. Right, so I have now explained to you what we are taking a look at here. What is volatility? We looked at the positive side of volatility and the negative side as well. We also then took a look at why it's important, because what we do not want is volatility to the negative side where it stops you, and the worst case is then it comes back to your favor, which is what has happened over here. And then finally, you want to also see the how. How do you apply all of this in real time? How do you go and use this volatility? Now, this is what we have done over here in Master the Markets, because once you have quantified your bottom and tops, then you are able to get all this data and stats that you can use in your favor and trade with absolute conviction for consistent performance. Okay, that's the whole premise. And it's so powerful because it's a flexible framework, it's not rigid, and you can use this in alignment with anything, right? With VSA principles, you can use it with stochastic, order blocks, anything, name it, and you can do that. Okay, traders, I guess that's that one there, so you guys can reflect on that. Those of you guys want to look through the recordings, you can do. But what I would say is the first place would be 7 steps to CTP. Okay, so you can go through all these principles on the 7 videos over here, right? Once you put your details in, and then you click on the green button, and then you will get it all in over here. Okay, and go through the MAE in much more detail here on video number 4. Very, very powerful. The video number 5 will teach you how to also tailor your trailing stop loss as well. Okay, so that's all there. If you want to get the indicator, or some of you have lost momentum, some of you over here might say, I lost momentum, I want to get back into it again. We're always here to support you. You can always find that on SMI and VSA page over here, and you can then take a look and get both those indicators onto your screen, just like how I've got it over here. All right. I've got all the VSA, the volume, the stretch, and then I've got the SMI overlaid on top of it. Okay, so you can get all of that to get a very clear picture. The other thing is also our YouTube channel as well. If you want to see how we are taking these trades live, including this one we've done today, right? We did the whole analysis. Then you can go onto youtube.com/master the markets. After you click subscribe, as I said, click on the all bell icon. Then also the Trade Guider channel as well. Then you can also go and subscribe and then click on the all bell icon. And then here under the live section, once you go here, you can see all our previous videos over here as well. You can even revisit today's one also as well. Okay, you can do all of that, right? And there's a lot of amazing videos in there where you've seen some trades, go to a stop loss straight away. Some of them come near to the stop loss and then reverses to the target using the MAE principle. And then you will see some of them also go and hit all three targets, which was a very iconic one on Brent oil that we did. In fact, a lot of our clients, using all these principles that we teach, then they go on to trade more instruments, more sessions, European and US session, and they show us all the stats report and everything. So this is incredible, traders, because we show it to you, not only just talk, but show it to you in real life conditions that the proof of concept is there. Okay, so that's that one there. ETM Summit is there as well, traders. Or happens once a year. Okay, it's going to happen on 17 and 18 October. Great opportunity to meet very inspiring traders as well. Some of the traders over there, is the ones that has inspired us to come this far since 2010, over 15 years now and going. And you can get both the tickets. You can get both in-person or online tickets also. There's only one ticket left for in-person. Online tickets, you know what? There's quite a few still left. You can take them, but once they're gone, they are gone. Okay. Those of you coming in person, over the 2 days, there'll be lunch provided, and then over the first day, we will have dinner in the iconic Heron Tower as well. That's the plan for now. Over the 2 days, what we'll be covering: advanced price and volume techniques. Over the first day, we'll be doing live trading, and then we'll be also covering the strategy in much more detail, the range runners and the stretch principle, and then also some research updates we'll be sharing with you. And the more interesting thing is, some of our clients who have got the research updates will be also doing some presentations. Over the 2 days, there'll be recording available. Some of you are asking on that. We will record it and then we will also send that over to you. So that's all included in the price. You can go and read through it and get your tickets when you want. Okay, highly recommend that. Really a great way to re-energize, inspire ourselves as we go into the new year. Okay. And then also then you got the Trade Nation, a good shout out for them because you're sponsoring the event as well as sponsoring our Telegram channel where you're getting all these signals getting through to you. All right. I guess traders, that's pretty much that from me on today. We covered quite a bit. We looked at the live trading position on dollar yen because it didn't match up with the timing. We didn't enter it, and that's good because we escaped that highly volatile bar that happened right now. There is another entry based on your strategy 2 or strategy 3 based on SMI and VSA principles. You can take a look at that if that is in alignment with your objective or not. And then we also looked at the volatility and going through that in much more detail on what is it and why is it important and how to use it, especially using the SMI MAE tables. Traders, so quite a lot. Those of you who want to then go and revisit this, you can revisit it. Other than that, I will see you guys on the ETM Annual Summit next week on Friday and Saturday. And as we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master. Take care and bye for now.